Hello. One of the things I see missing from the book is something that I don't want to assume everybody is up to speed on, and that's retirement accounts through your employer. So this week's assignment that you're going to get to here after this video is to start to pick mutual funds for different times in your career when you have a retirement plan to invest in. So I wanted to spend a couple of minutes just talking about. You've all probably heard of a 401k plan. There's other forms of that, 403b, those types of things. These are retirement accounts that you fund out of your income that are run by your company or your employer. They are built so that you extract or take money out of each of your paychecks on a pre-tax basis, so they have a lot of good tax advantages. So let's say I get paid whatever, $1,000 a week, and my employer has a retirement plan. I would allocate $50, $100, whatever I can afford that would come out of my paycheck and automatically be put into my retirement account. So that gives me tax advantages. My taxable income at the end of the year will be less because this money came out tax-free or pre-tax. And then that money is in what's called a qualified retirement account, a 401k plan. You should always invest in your employer's retirement plan, especially if they match. You'll hear something called an employer match. A lot of you probably already have this. So if you put in 3% of your pay, your employer may match that dollar for dollar. So therefore, you should always put in at least that amount because that's basically free money from your employer. So if you don't know a lot about 401ks and 403bs and retirement accounts, the best thing that you can do is to go out and do some research. And there's any website, any of your major websites out there that have retirement plans will talk about these. There's stuff all over the internet with that. So make sure you're up to speed on that if you're not, if you're too young to have been introduced to that. Take some time this week and go out and do some research. Many of you already have these set up. So I didn't want to assume that you didn't know about these things. So for the purpose of our assignment, I want you to think about having a retirement plan at work that's funded by your income. And so you're starting to build up, thousands of dollars over time that you can invest in mutual funds and stocks, which are the things that we're learning about. So, in your younger years, you can be a little bit more aggressive because you're not going to use the money until retirement. So you can kind of deal with the ups and the downs of the stock market through time. As you get closer to retirement, you might be a little bit more conservative because you don't, if the stock market happens to drop significantly right before retirement, that could put you in a difficult financial situation. So I want you to think about, accumulating wealth over your lifetime in this retirement account, in these retirement accounts, in these investment accounts, and then what you're going to invest your dollars in, which is what we're learning about in this particular class. So I hope that's not too confusing, but I didn't want to get into my assignment this week. And, as I looked back through the book, it doesn't go into a lot of information with regards to specific retirement vehicles through your employer. So I wanted to give you a little bit of an introduction for those of you that don't know too much about that. So, do some research about that if you're a little light on that, but it shouldn't affect you much for this week's assignment. And if it does, send me an email. I can get back to you with any specific questions that you have. But think about what I said in terms of investing over a lifetime and being risk averse versus being aggressive versus being conservative. So just some notes for you as you get into the assignment this week. And again, there's no right or wrong answers. The key is that you're investing, you have a plan, and that you're putting money away. We'll talk more next week about budgeting and savings and how that all kind of circles back to these investments. Have a good week.